position sizing matters, and you can't let one mistake blow you out because you need to make it to this type of market to actually make money. And then, of course, the other side to it is when you're here and you have profits, no matter what you think the future holds, take them, take a portion of them. You will be happier.
And welcome to another episode of the Kinvestor Report, where I chat with industry experts to discuss the market, commodities, and the stocks and the economy. As always, I'm your host, Arlen Hansen. I'm welcoming back Brian Leni today. And if you're not a subscriber, Brian Leni, I highly encourage you to become one. He has done his subscribers enormous favors with his prowess and due diligence and his connections in the industry. And I've seen him return to his shareholders an incredible amount of returns on his investments. Obviously, disclaimers, it can't be guaranteed moving forward. But this guy's just a really fun guy to pick his brain. He's a really good value. As I say in the interview, he's got 100 kids, lives a family life, but smart as a whip. Brian, great to have you back on the show. How you doing?
Good. Thanks for having me on.
Yeah, right on. You look chipper today.
I am.
Yeah, attaboy, so I kind of want to do a PDAC recap. I unfortunately busted up my knee, so I couldn't go. So I want to chat about what you saw on the floor, who's who in the zoo, what the kind of general themes were, just for people that also couldn't go to the PDAC because it's one of the biggest mining events of the year. That it's if you could be fortunate enough to go, I think it's a great place to kind of go meet management teams, etc. And newsletter writers like yourself, and kind of get yourself into the scene. But a lot of people can't make it there, and I heard it was cold.
Yeah, well, honestly, compared to how cold it was in years past and how cold it's been as like a Southern Ontario resident myself,
Okay.
January and February were much colder than March 1st or 2nd or whatever days they actually, yeah, it was second, first, second, third, and fourth that it appeared on. Yeah, and it was like much milder than it's
Oh,
been in the past. So it was good.
yeah.
But for West Coasters, I can see how that's different.
I remember one
Um,
year we showed up at like we got on like the 10 o'clock flight and it was minus 40.
oh,
It was just like, what is happening here?
it is
It's
terrible.
just all right. Enough about the weather, enough small talk. I guess my number one question, like, what was the single biggest shift in the mining narrative this year compared to last year? Or should I even say over like the last 6 months? Have you seen a big shift in narrative at all?
Uh, it's tough. I don't really look at myself as being probably good at gauging that sort of thing because I very much do my own thing and I'm looking my process really never changes, and so that's probably why I'm not the best gauge on how the narrative or how some of the sentiment is necessarily changing. I can just tell you what I saw and you can sort of take it for whatever you want.
Yeah, we'll parse from there.
So the interesting thing that I saw or observed was that there was a bunch of companies at both PDAC, but more so even Metals Investors Forum a couple days prior to PDAC that you normally wouldn't see at the event, and they were in huddled meetings, obviously talking about deals that are probably to come. And I think that that shows you that, like for me, anyways, that we're in a really good market. That money is flowing, exploration is starting back up, and I think that's really what's lagged the sector. And for me, looking at value and looking at the companies that I spent some time with at PDAC, it was probably more focused on the exploration side of things. And to me, I think that's where the value probably is, and I think that's where things are likely headed. Because the move in a bull market is basically the same every time. At the high end, the producers, royalty companies, then it goes down to the developers, and then finally the exploration companies. So I think that swing or that push is to come, and I think you should probably see a slew of new deals probably coming on the horizon out of PDAC, which is why PDAC was started in the first place, was for the
First.
guys to do deals,
Yeah.
and so it makes a lot of sense.
It wasn't set up just to go drinking at the bars.
Yeah,
Come on.
that's right.
That's what I thought it was.
Yeah.
Okay, so actually, so let me have a question with your answer there. So as you talked about like the three, like the producers, the mid tiers or developers, and now the exploration side of things. And if that's the hot topic here, does that mean we're longer in the cycle than we might think we are?
Uh, maybe. Again, it depends. Like I would say it's where the value is, and whether that comes like in the later parts of the bull market. absolutely sure on that. I just know that the sequence happens sort of how it is. And I would still say that, that very much that the generalist, while they're coming in, they aren't here yet. And that's more of what I would rank to say, yeah, we're later on in the cycle when that generalist money comes in en masse. And then you start seeing silly valuations, especially on the top end of things where things are going for much higher prices, and the future is expected to be that much better. And I would say we're nowhere near that. We're still
No.
we're still in that sort of I think if you still need to be a good stock picker. But there is value to be had. It's a little bit harder than it was a year ago to find good value. But if you look and you know what you're looking for, I think it's definitely still there. And so yeah, I would say you're still in that first half of the bull market. But given everything that's going on in this world, who knows, what kind of trials and tribulations we're going to have along the way. But the setup is perfect for metals and mining.
Yeah, when you talk about the exploration sector, are you talking about like the very early stage companies that, they've got some good targets, they've been backed by some good people, but they still don't know what's in the ground? Or
Yeah,
are you talking about something that's, we've seen a little bit of data from the drill bit. You can see something shaping up and, you got a good tech, like where do you draw the line on where exploration starts here and where you think there's value?
I typically define exploration as pre-resource.
Okay.
And then you rightly break it down even further. And so for me, like unless I'm doing project generation, meaning project generation business model companies, I'm not as inclined to go after, those probably sub $10 million market cap companies. It's still so very early and the risk is that much higher. I like to see a few drill results, see what the market has missed, and really for me have some visuals and some data to go behind so that I can kind of piece things together and where it might be headed. And so I did a recommendation right after PDAC that I thought was a good pick, but also had some time essence to it, because drill results were coming out, and I think that the company, while they don't have complete control of it, probably should have had the drill result that they released on the Monday at PDAC. They probably should have released it the prior Monday.
Okay. Yeah, yeah.
It's
Well,
and because I think it got missed, and that was to my advantage, and it's because I think it got missed from a lot of people at PDAC because you're so bombarded by everything.
we could
And
have a long talk about this, right? Like I've had hundreds of clients go to the PDAC, right? And the time
yeah,
they like the amount of times that multiple like they're all putting out press releases on the Monday.
yeah,
Like they do get lost. And like I do
yeah,
advise my clients, don't wait till the Monday. Everyone's on the floor, everyone's on the show, and
yeah,
everyone else is trying to put out news. So
yeah,
what do we got to do something different? I know you can't hold back information. You got to be timely with your disclosure. But like, yeah, don't be sitting on news till the Monday of the PDAC because 9 times out of 10, the PDAC curse hits as well. And you
yeah,
wasted a really good piece of good news
yeah,
during this time, right? And like we didn't get the PDAC curse last year. We didn't get sell in May and go away last year. We had a really different cycle last year compared to what we've seen in previous years, right?
yeah.
We had a great year. Do you see like we had a I don't want to say it's a curse yet, but like PDC kind of stalled. We've stalled since the PDC, both on the commodity prices and the stocks and the financings, right? You've
Right, right.
noticeable difference. Do you think this is something that continues to drip out slowly?
So I guess I can sort of answer that in two different ways. I'd say first and foremost, for me, I don't really play the market trying to think of those sorts of things. I don't think I'm very good at it,
Okay.
and it doesn't change my process. Like I'm very much I just kind of plod along, and when I find a good company, I sort of not no matter what's going on in the market, but it doesn't fully. It's not a high ranking priority for me where the market is, and it's more about the value proposition and what the company specifically has. I think that for you know the specifically what's going on in the world right now, I think that the war in Iran, like this conflict that we've got in the Middle East, has brought a lot of things into question, in terms of how like the oil price has spiked, and that is going to certainly if this is prolonged. Q2 numbers aren't going to look like Q1 numbers. It's really going to close that gap for these precious metals companies. And what I would say is that probably smart money looks at that and is just already prognosticating what could be ahead. And
Absolutely,
so
they are.
like I think that is, and it's that has more to do with why the market has maybe stalled or taking a break rather than anything to do with the show. Like it
Mhm.
was interesting in January when because this is what happens is when euphoria hits a peak when you're at conferences. And this is, if you're gonna, or at least if I'm gonna try to explain it, this is sort of what probably happens in prior markets is people release a ton of news around conferences. There's usually a lot of euphoria, a lot of good news. Usually things are like sort of ramping up, and then you have that sort of capitulation event, and that's sort of what leads. I think right now, in January, I could say like the conferences may have been somewhat of a curse, and like the very next week or the end of that week, you have that huge correction on the Friday.
Mhm.
But I think the market going into PDAC was just recovering, and I think if that Saturday, or was it February 28th, if we hadn't had that stuff happen in the Middle East, my guess is that we would be plodding along quite well in this sort of recovery after whatever happened in January.
Yeah.
So
Okay. Okay. So I want to play the devil's advocate on this. Okay. Because I just had
yep,
this great conversation with Tabby Costa talking
yep,
about no one ever rings the bell at the top.
right,
Okay. And the amount of conversations that I had with like newsletter writers and investment advisors and analysts and fund managers in January, 99% of them said, I can't think of a reason why this would stop.
right.
Okay. Which scares me. Like when the smartest of the smart people can't think of something that would stop a bull market, it kind of
Yep.
makes me go, oh my God, what's happening? And I'm just really curious, could this war be that black swan event that doesn't ring the bell at the top, but slowly bleeds the market? It's just a question. I don't know the future, but like
For
if this goes
sure.
on for a long, long, long time, I don't I see like that risk there of people not really wanting to pull out their wallets to buy anything.
Yeah,
Right?
well, I think in the it always depends on timeline, and this is sort of why I haven't put a lot of stock into trying to guess where markets are headed, because I think over a long enough time period, everything sort of works its way out. And again, if you invest in good companies that are doing good things, I think that in my experience, anyways, things tend to come together. Now, I think war and the uncertainty surrounding how long this is going to be and to what depth it's going to be, certainly in the short term, and like I mean in 2026, that could definitely stymie the market. And I think that, talking about what Q2 looks like, obviously with higher oil prices, with elevated pricing related to the Strait of Hormuz, and what that means to the operating costs for a lot of these companies, it's negative. But that those higher prices also translate into other things. And whether it's aluminum, whether it's more critical minerals, all these things are going to have to go up in price because of the very same reasons. And so I would say, while I can't be sure that it's a quarter or 2 quarters or three, but I would say, in the not too distant future, maybe even a year out, a lot of these metals are going to be worth a lot more, because you've just put deglobalization on speed. and
Mhm.
and
Mhm.
you are ramping up the diversion, or the breaking apart of East and West, or global South, however you want to coin it. And so ultimately, I think for things like precious metals, gold in particular, I think it's bullish no matter how you look at it. And I think the critical minerals, copper, all these different base metals, they're all going to be required, whether we're in a war machine or whether we're plodding forward with the green economy, with a whole bunch of other social things that whatever else, the ascent of humanity. All these things are going to require higher metal prices with what we have set up and what society is deciding they want to move forward with. And so I think it's a matter of time, but I don't know whether that's a quarter, 2 quarters, 3 quarters.
No, I really like that answer. No, it's a matter of time, right? Because we don't know what's
Yeah.
going to happen next week. But for long term, the fundamentals are still absolutely in place.
Yeah.
Actually, if anything, maybe the war makes it worse. Like, look at the infrastructure build that's going to need to happen.
Yeah.
Like, yeah, how much more copper are they going to need for that? Blah, like the list could go on. I don't want to dive actually into it too much, but like the fact that a lot of these critical mineral stories aren't exploding right now to the upside, like, is a little shocking to me. Like,
Well,
like they're not moving.
it is, and it is like they're just the markets are so small. And I think that investor, or at least myself, I have a lot of trepidation in terms of what is the best way, or if at all, to wade into them. I think, in the past, what I've seen is that these sort of moments are fleeting. And the system seemingly has a way of working its way out, meaning production comes from somewhere, some sort of hidden stockpile, or something happens where, things don't continue to go up, whether it's the tungsten price, whether it's, the heavies, with the rare earths, like there's something seemingly happens that the market doesn't expect. And this is what high prices do. High prices are the cure for high prices. And
Hmm.
so for me, like, I don't, well, I'm very tempted. I don't always play those types of things unless it's pretty straightforward to me what the deal is. And so we'll see. Like, I think you're right though. I think we are going to see a spike in these metals. It probably just depends on when the market decides whether this thing is going to be prolonged, or whether, you listen to the war's already won. Right. And
Hmm.
so, I think that is the big key, because I think there's still enough uncertainty about what's really happening that the market hasn't decided yet. But my guess would be that you're probably right, that things haven't gone up like they should, at
Hmm.
least in this immediate term. So that's probably something to come.
Most likely just like a rush to some liquidity, right? Just for some people
Yeah.
like, oh, I just want some liquidity, get me out, and then that flushes out.
Yeah, yeah.
Um, okay, so I really like your business model of buying good companies with good people, and it's obviously worked out really well for you. Like you were a huge backer of Thesis,
Yeah.
right? For how long?
It's gonna be 3 years, I think, this
Okay.
summer.
Yeah,
Yeah.
and huge returns for you and your followers. Huge, like
Yeah.
huge returns.
Yeah.
Um, okay, so yeah, if I'm not right, the Thesis Gold has the Lawyer's Ranch deposit, and Centerra Gold and Anglo just put in a ton of dough at a premium
Yeah.
to market. So talk about that.
Toodoggone is an amazing place. So much potential, in north central BC, but not the Golden Triangle. The Having been there last summer, I can attest to, you have more of a rolling hills than these sort of jagged, steep ones that you see in the Golden Triangle. I think it's going to be that much more amenable to mining in the future. I see Thesis Gold as sort of that crown pillar of what the Toodoggone is right now, given their size, around 5 million ounce gold equivalent, gold and a silver component. The silver component is something that really gets missed, I think, on by the market. And that's why you're seeing somebody, really of the ilk of Anglo Gold Ashanti, that's taken that 5%. That's a huge deal. And I think that really speaks to what they may see in that district. And for me, what I see is you've got Amark that's made along with Freeport, arguably the most important discovery in that district, that we're not totally sure how big it is yet, with Aurora. And you have TDG that owns a portion of that sitting right beside it. And then to the south, you have Centerra Gold with Kames, 50,000 ton a day mill operation that hasn't been in operation for a while. You really have the components of what I think is setting up to be, a 15 to 20 million ounce gold district. And I think that's what Anglo sees. And my guess is that they probably want to see what Freeport's going to do with Amark, or vice versa, what Amark's going to do with their minority interest, before maybe making a bigger splash on the grander stage in that consolidation of that area. But Thesis is again that other, the crown pillar, because of where it is in development. They're at feasibility study. They're going to have an FID in the next 3-ish years, and that's super important if you want to hit the ground running. And so I'm really interested to see what goes on there. I'm also a shareholder in Sun Summit, which is just north of Amark and Freeport's Aurora discovery, and it's just to the east of Thesis. And they've made a couple really good discoveries in themselves in Creek and Finn, their JD project. And again, that's a story that's just emerging. But to me, looking at the residual grade of what they've already hit, to me that looks like an analog to what Thesis has already uncovered. So I think it's super exciting.
First of all, I have to make a disclosure to all my listeners that I'm a shareholder of Amark. I've been a shareholder for about 3 years, and I get paid on a monthly basis by Amark, so I can't make any comments on Amark specifically. But man, this district is sure getting exciting. You got Skeena in there, this Anglo and the Centerra in there, Freeport's in there. I think this could be one of the most exciting things that's happened in BC mining in a long time.
100%,
Right.
100%. And it's again, it's just one of those things that I think it's just going to take a little bit of time for that district really to come into shape. And thesis again, the reason why I think it is that the company, or in my view anyways, the company I've decided to move forward with is because of how developed it is. That's the one
Hmm.
that's really going to shape what happens in that district,
Yeah.
in terms of where the mill might be situated, and such. And so yeah, no, it's going to be a major thing for BC, and that's why you have all those senior mining companies there.
Pretty remarkable how one drill hole can change an entire district the way that A-Mark changed that entire
Yeah.
district. It was just, I've been fortunate to be involved in some major discoveries in the past and see things light up, but I don't think I've ever seen anything light up like that. Like that was crazy.
It's
Very,
amazing.
yeah. Okay. So we're talking about good companies, good people. What makes a good companies and good companies and good people? What's your criteria for this?
Uh, so it's a bunch of things. So we'll start on the people side. I think that good people, obviously track record comes, it's got to be up near the top. People that have done stuff before. Now that can be a little bit of ambiguous for people that haven't been in the sector or maybe viewing the sector from afar, because a lot of people claim a lot of things, but they aren't necessarily, not that they're not true, but they're stretches of the truth, I would say. And so you have to sort of be careful. But you want to see someone who's done what they're set out to do, like their talents, their experience align with what they're doing. Exploration in the Toodoggone, somebody that's been there for a long time, someone that's done this before. Amark is a really good example. Hunter Dickinson is synonymous with these porphyry discoveries. They made the original Comess discovery. These flat-bodied porphyry style mineral bodies. That's what they've made a living doing, and so you want to align with people that have done it before and are doing what and are using that experience to align how they're projecting forward and whatever their new endeavor is. Um, the other side to it is for me, it definitely has to do with who the person is. Now, like for me, I think I'm a good judge of people. And when I talk to the person, see how they're going to conduct their business, what their vision is for how they're going to add value, that speaks a lot to me. I had a conversation with Andre Gaumont, who's famous for his success with the Virginia gold mines. And that was about a month and a half ago. And he really crystallized to me the importance of a CEO's ability to communicate, to tell the market what their vision is, and actually execute on the vision that they're projecting. And when you
And execute. You gotta do,
yeah,
it's a
that's the
two-part
important.
story here.
It is because talk is cheap, right? And it's not
100% it
until
is.
people act, can you really push that forward. So I think those are the big things about people. And then a good company is the result of good people, in my view. They pick good projects, they're able to raise cash, and they execute. They put an action plan together and they execute on adding those value added actions over time.
What I like about that too, though, as well, is like when you're investing in good people, that you really believe in and have a track record, you can get through these waves of uncertainty because you're
Absolutely.
like, hey, these guys have done this before. These guys can get out of this kind of mess, right? Or these guys aren't
Yep.
concerned, or they were smart enough to raise capital when it was good. So yeah, the company's not broke
Absolutely.
trying to raise money at a 52-week low, right? That's what good management teams do, right?
Totally.
Right. And they
Totally.
share and they care about their cap table, right?
Yep.
And they care about owning their stock, right? And things like that. Okay, so if we've seen money flow from the majors, they were all gushing cash for a couple quarters there. And you're right, they're probably going to gush less cash because of the price of oil spike. It's actually going to be I could do some interesting analysis on that. But like, so these majors that have got a ton of cash right now, we got to be going into a wave of acquisitions. It just feels that way. Like they got to replace what they mined. And there's deposits out there that are still cheap, in my opinion. Not that I'm an expert or anything. Like what makes a junior a prime takeover target right now?
I think it certainly depends on the acquirer, but I would say proximity to production has to be at or near the top. Like that's how you add the most resolution to your bottom line within the shortest amount of period. Meaning a company that's at FID, final investment decision, or they're in construction, or they're on the precipice of actually pouring that first dory bar, or they're that
Hmm.
first concentrate production. That enables the acquirer to go to make the acquisition probably at the highest price, but then they can add it to their bottom line right away. And it's not a future projection. It's something right now that I'm taking advantage, especially when metal prices are high. I think that sort of matters. The other thing is, I think, is regional. I think if you look at where some of these senior miners are situated, if you look at mine lives, you can see that there's definitely a handful of situations that I can think of where you have some that mines that are reaching or at the near portion of the end of their mine life, and I think they're going to make acquisitions. One of the companies, like one of the big things that I think is in vogue right now are these bulk samples, and I think investors have to be really they ask a lot of questions about
And keep going. Sorry.
why companies are doing bulk samples, because to me it's like it definitely looks like something that's in vogue, like someone else is doing it, so I'm going to do it. And so you need to ask a lot of questions. But I think, in one situation in particular, that I invested in a company last fall, and they're going to be doing a bulk sample, and they're putting a bunch of work into creating a ramp, and it's going to be some underground operation. But it makes a ton of sense while they're doing it. They're doing it in conjunction with their largest strategic shareholder, who has a mine 14 kilometers to the east that has maybe 2 years left in its mine life, and about 1,500 tons per day in mist volume. And so, our capacity. And so it just makes total sense why they're doing it. And what I would say is, like, as soon as that bulk sample is done, that company's going to be cashed up. They are going to have to still permit a mining operation, but you can see the sequence of events that it's pretty straightforward where this is headed if the mining works out, like if they can process the ore properly along with what they're already doing, and the mining operation itself doesn't have any hiccups. You can see where it's headed. And so I think there's a few situations like out there that you can sort of pick off, and I
Mhm.
think you can kind of come up with a timeline of when they're probably going to occur too.
As you were telling me that, companies that are close to production, I was just trying to think in the head how many times I've seen majors acquire deposits that are nowhere near production and they're on the fucking sale block like a few years later. So like, and I'm just top of my head, I'm sure you can name more, but like the Hathor Rough Rider deposit,
Yeah.
right? Like I worked on that from scratch to buy out from Rio for
Yeah.
634 million bucks. And
Yeah.
what did Amir buy for? Like 30? I don't know the numbers what he bought it for, but he
Well,
bought it back at like pennies on the dollar.
so
The other one is the coffee deposit. Like that one got bought by, was it Kinross for
Gold Corp.
200 or Gold Corp for 250
Gold
million
Corp.
bucks? And like
Yeah, yeah.
that's for sale, right? Like,
So I think there's two different things happening there, and you can split it into two different regions or parts of the cycle. I think what you're describing is stuff that happens at the top of the cycle, is when things start being bought because of scale, because of, they've made a ton of money. And that's, euphoria. This shareholders are telling the senior mining companies basically to make bad decisions, and they do. And then versus where we are right now, where I think it's going to, like, while these guys can still make mistakes, I think if you see a deposit that's bought that early, it's going to be top quality. It's going to be a major discovery that the company recognizes they want to control that district right away.
like what we're
And
seeing in the Toodoggone, basically.
yeah, well, and if,
Like,
if it was probably any other partner other than Freeport, given, and again, this is my bias in seeing that district as a gold district, not as a copper district, at least how it's shaping up right now. I think if it was any other major besides Freeport, I think it would be a sort of a foregone conclusion that they're going to engulf that whole area. That's why I think it's really interesting, and probably a lot of what happens is going to be dictated about what they do with their 70% of Aurora, and whoever grabs that, my guess, I lean towards a senior precious metals producer,
mhm.
um, that could have the biggest push in the sector. But again, exactly right. Like I think, that drill hole, what it is and what it's shaped up to be in this sort of market, that's the kind of deposit that gets bought before it's got a PEA, before it's got a PFS, because
Hmm.
at the surface, you see how meaningful it's going to be.
Hmm. Hmm. This has been such a good conversation. I love it. Okay, I'm gonna do some rapid fire questions just for fun, just for shits and
Sure.
giggles, okay?
Okay.
Over the next 12 months, base metals, precious metals, or critical metals?
Precious.
Okay. Oil slash gas or uranium?
Oil.
Developers or explorers?
Explorers.
Producers or ETFs? Oh, it's getting tough now.
No, I'll stick with producers.
Okay, we already went through this. PDAC curse this year, yes or no?
No.
Okay. Sell them and go away this year, yes or no?
No.
Okay, and physical bullion or equities?
Oh, I think it depends on who you are, but I'm an equities guy,
Yeah.
so I'm gonna say equities.
We get a little more liquidity with equities, right? When we need it. So
Yeah, well,
yeah,
that's where my strengths come
yeah,
through, where my advantages. Yeah.
yeah, I do collect bullion, but like a portion of what my equities are older for sure.
Yeah.
Okay, and then what's one contrarian view about mining you believe most investors disagree with?
Say that again.
What's the one contrarian view about mining that you believe most investors disagree with?
Oh, I'm not sure about the question.
My answer would be, not that you care about my answer, and neither does my audience care about my answer, would be just like things don't go straight up forever. Like
Right.
literally, like when I was in Vancouver at the Vancouver conference, like there was not a single person there that was like, "Oh my God, this is just going to keep going forever, keep going forever." Like the euphoria was insane, right?
M-
So
maybe I would just say the difficulty on not only discovery, but building and operating any mining operation. Like I think the longer I've been in this, the more reality check you get about how difficult of a sector this actually is, and how like the odds are stacked against you. And that's why you have like the ability to make multi-baggers on your money when you actually find something of quality. But the odds are you probably won't. And you have like some excellent exploration geologists that go their whole careers without a discovery.
I know, isn't that crazy?
It is crazy.
Oh,
It
so
is.
sad for those guys.
Yeah, yeah,
It's like they
yeah,
put their heart and soul and years and just, like they're smart people. It's just we don't know what's underground until you drill,
yeah,
right?
totally,
And
totally.
and actually this is just a totally off the cuff question too. You get someone who's made you a ton of money. Okay, let's say a John Robbins. Let's be honest, he's
Yep.
made the market fortunes. Okay, like an incredible geologist. Is he the type of guy that if he said to you, Brian, I got a good idea, but I don't have a drill hole. Cut me a check.
Yeah.
Is he the type of guy that you're like, okay, I'm
Yeah.
willing to
Well,
do
and
that with good people.
yeah, absolutely.
Yeah.
Absolutely. And that's like there's more than a handful of guys now in my sort of network that it's like that,
I will
where
be one of them one of these days, Brian.
that it's just I'm very much like in terms of the companies and the people that I get to know. That's how I invest and how I've been so successful. And really, it's a pretty tight network of people that I've sort of invested in. If you look at the companies that I've had success with over the 10 years I've been doing this myself independently, um, I've had success. Like probably 80% of my wins have come from like
The same
one,
core group of
yeah,
people.
one step removed. It's
Yeah, yeah,
insane when you think about it. Or like
yeah,
I've thought about it multiple times.
yeah.
So
And it just makes you beg the question, why would we go anywhere else?
yeah,
Ever, like
well,
ever. Like if I don't care how big the story you paint to picture is, if you got some people that haven't done it before, like why are we listening to you?
right.
Right. So
There's sage wisdom in what you just said. There certainly is. And you can look at the effects of even like these sort of titans. Like if you only invested in Lundin backed companies, or if you only invested in Ross Beatty, if you only invested in Robert Friedland, and there's a whole host of people that probably fall in that, but that's probably like right now, a few of or a handful of the top guys, and you're absolutely right. You're absolutely right.
I think that comes with just time and experience, right? Like when I was younger, hell yeah, I would cut a check at a tinier market cap with a less experienced team because I just thought the upside was that much bigger. It was like that
Yep.
lottery ticket, right?
Yep.
As I get older, I'm like, I've had to work really hard for my money. Government
Yeah,
tries to take 52% of it all the time. So
that's right.
I'm working really hard to keep it. So like I could clearly have gotten way up the food chain since when I was earlier in my career. Just like with
Yeah.
what I'm willing to open my checkbook for, what I'm willing to cut a check for, or companies that I'm willing to work with, period.
Absolutely. And like for me as like a value investor, someone who's searching for stuff that is cheap, it can be so enticing to go with setups or what you would call like C teams because the value proposition is there. But the thing that I've come to learn is the value proposition is there for a reason. And they become these things like if you or what I would coin value traps where they just can't escape being discounted by the market for a variety of reasons. And so that is another thing, and I could probably tighten it even more, but where I don't put money with the C players because it's
Mhm.
just it takes so much luck to make those things work. And what I mean by luck is usually your timing has to be right. And this is where people can confuse bull markets with brains because they invested in 2024 in a mediocre company with no idea. And within a year, they saw that thing triple. And they think somehow that has something to do with them.
Yeah.
And unfortunately, over time, when you make money that way, you will give it back. It's
A
just a
hundred,
matter of
you'll give
time.
100% of it, maybe even more back because
Yeah.
you didn't pay your taxes on your gains in the first place because you thought you could just take your win and make it
Yeah.
triple again. Oh
Yeah.
yeah, like we've seen that a million
And
times.
and honestly, Arlen, like this is like I'm speaking from my own experience, not
Me too.
necessarily exactly with that, but like I lost a good chunk of my portfolio because of being way too aggressive and spurred off emotion. This is actually that was the heart of what I talked about at PDAC and Metals Investors Forum this year was how in 2020 I made a ton of money in Abra Silver, and I participated in these placements in April of 2020 at really low prices at like 6 and 8 cents, and had warrants at 12 and 16, I think. And later that year, Abra hit a high of like 84, 85 cents. And I was sitting there with like I'd taken profits on my principal and I had these warrants and I sat there and I thought, everything looks like it's going to keep on going up. I'm going to wait. I've got another year on these warrants and I'll just wait it out and exercise them at a higher price. And if you recall, I remember vividly, the market dropped off in Q4 of 2020,
Oh yeah.
never really recovered. Abra Silver, to um, no failure of theirs, their share price dropped back down to the 30s. And that's where I ended up exercising my warrants. And you know what? I still made money. Yet I had this like crazy like feeling. I was like it felt like a loss. And it's insane
Yeah.
it's insane to sort of talk about in a way because it doesn't seem logical because it isn't. But that's the way I felt. And then I went on this chasing of that missed opportunity or those missed gains. And then I took my portfolio and I shifted a ton of the portfolio dollars into these high risk exploration plays that were good companies, had some good people, but it's exploration. And it ended up being wrong for a number of reasons, and I lost a good chunk of my portfolio because of it. But it was the reason why I sat back and was like, I have to make drastic changes on the way I operate because I never want to put myself in that position again to potentially get blown out. And I think that's one of the biggest takeaways from what I just said to anybody here is position sizing matters, and you can't let one
Mm.
mistake blow you out because
Hmm.
you need to make it to this type of market to actually make money. And then, of course, the other side to it is when you're here and you have profits, no matter what you think the future holds, take them, take a portion of them. You will be happier
And you
two,
feel
3 years.
it's so much better and your nervous system relaxes, right? Like
That's right.
we have a word in our office, we call it upstress. And it's like it's not when markets are shitty, it's actually when markets are so good. It's
Yeah.
exactly what you said. You kind of start calculating your the value of all these things trading at XYZ, and you're scared that it's going to go lower, right?
Yeah.
It's yeah, we call it upstress. We call it upstress. Brian, I really enjoyed that conversation. You're an incredibly fun guy to talk to and knowledgeable and level-headed and also one of the really good guys. We've had a lot of lunches together and you've got 100 kids. You live on a farm,
That's right.
and I've just really appreciated your energy and just who you are as a person and how you represent this market. So
Well,
thank you for that. You do a great service to your subscribers. The junior stock review.com. We got a link to it. We'll put all the links in here. I highly encourage you to reach out to Brian or go to his website, take a peek at what he's doing. I've seen him make some monster calls over the last few years, and we've had timing in our back. But I also think that you got to do your homework to get that timing right. So, to my subscribers, please watch what Brian's doing. I think he's a really good guy.
well, thank you very much, Arlen. I
Yeah,
appreciate that.
man. Well, we'll sign off and hopefully see you again soon. If you haven't already, be sure to subscribe to our channel, follow us on social media to join the Kinvestor Network. The Kinvestor Mining and Energy Conference returns March 26, 2026. We picked that for no reason. Our annual virtual event features top companies across metals, minerals, and energy, plus a dynamic silver roundtable discussion with industry experts Chen Lin, David Morgan, and Peter Krauth. Sure to be an event you don't want to miss. You can register for this conference at the link below in the description below.